Welcome back to Profit Punch. In this video, we are going to look at over 25 stocks that are going to explode, and I don't think even AI is going to stop them. This channel is different from other channels. We're not just going to tell you what is going on. We're going to show you where you can buy, where you can sell, and how you can make profit as well, because this is mostly a technical analysis channel. So let's get to business. Stocks normally move in groups or sectors. I'm going to bring for you about 8 sectors, and I'm going to show you which one is the strongest, which one is the weakest, because the strongest sectors create the greatest returns. The strongest stocks in those sectors are likely to bring you the biggest profits. We'll first look at the explosive gold pattern that I think AI investors are missing. We'll see something that's happening in silver. So there's a lot of things that AI investors don't understand about silver stocks. And then we'll see that while people are also focusing on AI, they're missing out on crypto. It's moving a lot. We're going to see how to make profit from that. We'll see the nuclear stocks that are profiting from AI because AI seems to be driving everything. We'll see the quantum computing stocks that Wall Street is buying up. And this is quite really interesting. I think you really want to watch that part. And then, of course, many of the tech stocks that are very strong are being driven by AI. So you don't want to miss out by that. Then we're also going to see stocks in the financial sectors that are also using AI to make very huge gains. And then there are some stocks which are not related to AI, but are also making very huge gains. So I just call them stocks that AI forgot, but shouldn't have. If you're enjoying this video and want to build financial freedom using the stock market, I put together a free guide called 10 chart patterns that make money. It's based on the exact system that we use at Profit Punch, a financial newsletter and educational hub that sends you A+ stock setups where we tell you exactly when to buy and sell, and also will teach you stock trading from the ground up. These are the same patterns that our members use to catch moves like SMCI 250%, NVDA 200%, AppLovin 350%. The guide is short, visual, and beginner friendly. Just click the link in the description or pinned comment to grab your free copy. Now back to the video. At first, we're going to look at the explosive gold pattern that AI investors are missing. Gold has broken out to all-time highs. We can see gold has a 4-year consolidation from 2020 to 2024. Whenever you see these long, nice flat bases, and by the way, this is the weekly chart of gold. When you see these long, flat bases, when it breaks out, these are normally very smooth and very easy to get in. If you want to know how long such bases can go, you normally take the length of the base, which is about 4 years, then you multiply it by a half, and you're likely to get how long it's going to run for. So we know that since it has sat for 4 years, that means that gold is likely to move for 2 years. So it started in Feb, it's broke out in March 2024. So I really think gold is going to run up to the end of 2025. And why do I say this? I just tell you, look at history. Gold looks boring, but it has made some crazy moves in the past. So you can see my favorite move is here in 1970s, and it looks very similar to what we're seeing now. So it forms that nice cup and handle, and then we can see that for 2 years from 1978 to 1980, which are the 2 years which I think we're in, gold moved up 354%. If you put in $10,000, you got $45,000 back. That's how big these moves of gold can get when it goes to all-time highs. The question is, how can you profit from gold? The first thing you can do is get a leveraged ETF. The leveraged ETF that I really love for gold is Shiny. Leveraged ETFs have a faster move upwards compared to the primary market. This is a 3 times ETF of gold, and we can see that gold has currently moved 60%. The maximum move gold did from the breakout was 60%. And 60 times 3 is about 180. But we can see that this one actually did about 220%. So it's moving faster than gold, and it's relatively safe because if we look at the average true range, it's about 7%. So it moves about 7% per day. And a good time to add to these stocks is when it pulls back to the 50-day simple moving average or the 30-week, which is the 150-day simple moving average. You want to sign up for the newsletter, and I'll send you alerts. Then the next one is UGL, which is a ×2 ETF of gold. You can also see that it has moved almost twice the amount. Gold moves by 60. This one moved about 124. And of course, this is also relatively safe Because gold itself is a very sluggish mover. It only moves about 1.5% per day. And then that's very small movement. So you can get leveraged ETFs, which move like a stock normally would, and then you would be having good returns. So after 2 years, you put in your money at the beginning of 2024, right now, after 1.5 years, you got a maximum return here of about 150%. Not only that, once gold is moving, that means you can also be looking at gold stocks. And what are those gold stocks? Of course, there's so many gold stocks, but we want to focus on the best of the best. One of the best stocks is AU. So AU is a very nice gold stock. You can see that this was a swing trade that I sent out in a newsletter. Here we can see that it's also forming a very nice base on the weekly chart. This is something very beautiful, right? And it's been taking its time. So whenever stocks form such big bases like this, then you just know that they're going to run for a very long time. This is something called an inverted head and shoulders, as we can see. Then here it kind of breaks out, returns. The time it normally will move is normally the length, half the length of the whole base, which is about 2 years. Gold is going to move for 2 years, so I think this one's also going to move for about that long. The next one is HMY. It's been doing a very good move from 2024, from when gold started moving. In February 2024, HMY has actually gone up 250%, which is way better than gold. So you can just be holding onto these gold miners and making quite a bit of profit. Then there's another one called NGD. This is also a nice gold stock, but the reason I didn't like it as much as the other ones is because it was a little bit sluggish, but it did have a nice setup and I sent out on a lot. So I think you can even see here, this was a swing trade. But also I told people that you can just hold this as an investment. So you can see a lot of people already in profit. The next section of the video is what AI investors are not understanding about silver. Now, this silver is one of the things that people have really been missing out on. I've been watching it for a very long time. Silver has punished me because it has faked me out many times, but I feel like my time of reckoning has come and it is starting to pay me all those dividends for waiting for it. Because you see, gold broke out, but silver did not break out. So here, let's go into the weekly chart of silver. So here in silver, we see a very big base. And once it broke out of this, I thought it was going to the moon because it's a very nice base and it has a nice breakout. This sits for about 4 years, so looks very nice. But then silver all of a sudden starts misbehaving and it becomes choppy, as you can see here on the weekly chart. The best breakouts are not breakouts that are slanting down. The best breakouts are like the gold one, which is just a flat line, and then it breaks out up. These sideways breakouts, they're okay, but they're not as nice as the ones which break out straight. And then silver just did something very nice this week. And of course, I'm already invested in silver. I bought it right here on the breakout. So what's happening in silver? Silver initially broke out here, which was very exciting, and I traded it there. But then it started acting volatile and formed something called a double base. So something which we teach in the newsletter, Resource Hub. Go visit it, and then you can learn all of these things for yourself. And then now silver has broken out of that double base. This is the big base, and then we have a base on base here. These are very strong signals for a very, very strong move. And then you're going to be asking, Valentine, how bad can this move get? I'm going to show you how bad this move can get. So you see here in 2020, silver formed a nice cup and handle. This is a cup and handle pattern. So the buy point is around here. Silver went up 62% in about 6 weeks. And then I take you back to 2010. Silver did that. You can see here the slanting base. It broke out, acted a bit weird, which is very similar to what it's doing. Acted a bit weird and then had a nice breakout. You see that 2010 breakout, it went up 147%. But if you know me, you're not going to get 147%. You're going to get way more than that. And I'm going to show you how just in a second. 2006, you can see these big moves by silver because silver is a little bit erratic. But from what I realized, that once it starts moving, it moves very nicely. But you have to be patient. But now the real big, beautiful move, which is what I feel is likely to happen. Silver sat down from 1974 to about 1978, mid-1978. Silver breaks out, goes to all-time highs, and guess what happens? Silver went up 750%. If you put in $10,000, you got $85,000 out of silver. If you just put in $1,000, at the peak, your account even reached up to $8,500. I think this is what might be happening in silver. Why do I say so? Because you can see The base is very long and big. It's 4 years. We don't see any other base where silver sat down for 4 years. Most of the time it sat down for about 2004, 2006. That was just 2 years. Made a baby move of about 100%, right? Here, 2008 to about 2010, 2 years as well, does a 150% move. But here, it goes from 2020 to 2024. Then it does something called the base and base. That's why I'm expecting this thing to rip out at least 100%. And once it goes to all-time highs, I think it might even just break this earth. But yeah, how can you make money from silver? Of course, the first thing we do is after finding the primary market, because actually a lot of people cannot buy the primary market on its own. The best thing to do is find an ETF for silver. There are times 1 ETFs, but I wouldn't use that. Why? Because silver only moves about 3% per day. But if you want something stable, you can get a silver ETF. So here's a silver ETF that you can get, but you can see it only moves about 2.85% per day. Very small. So I don't even know this ETF. I don't use it. The one which I use is AGQ. Because remember, for these commodities, what you want to do is find a leverage ETF that moves at least 5 to 7% per day on average. Once they have those clean breakouts, you're going to make way more money than silver. Now I'll show you what I mean. So here we shall put silver, and then here we shall put AGQ, which is a silver ETF, right? So we go to 2010, all right? Let's see what happened in 2010. Very beautiful chart. So you see here the breakout, this silver moved 150%. Guess what the ETF did? 400%. So you see what I'm talking about. If we get a 100% move, 150% move in silver, because since the ETF is moving twice as much as silver, then it's going to give you way bigger returns than silver can. If you put in $10,000 here, you got $50,000. If you put in $1,000, you get $5,000. How long did that take you? It took about 7-8 months. This is the monthly chart. So that was very beautiful. Is there another time where we see a very huge move? Not yet, because this ETF is quite new, but I think you get the gist, right? Once you get a very nice move from the primary market, the secondary market is going to go crazy. In 2010, silver went up 64%. Guess how much the ETF went up by? 150%, right? And then it has even good volatility. That's what I like about the ETF. Silver stocks, they're not to be trusted at the moment because their bases don't look so beautiful. The first one is EXK. This is a silver mining stock. Yeah, the chart patterns on these stocks are not clean. You need a chart pattern that is clean and can easily make you money. The stock is going up, but the chart patterns itself are not so recognizable and clean, is what I will say. AG as well. You can see it's just so much volatility here, and it has a breakout. So I guess what you can do is wait for a pullback. If there's a pullback, then you know it's going to move for a while. I would stick with the ETF because unlike gold miners, these silver stocks, I don't trust them so well. But you can see in 2010, remember, silver had a 150% move. This silver miner actually did 500%, which is very close to what the ETF did. So you see when silver moves, these ones move as well, but you have to get in at the right time. And the chart patterns are not as clean. But don't forget about silver. Sign up to the newsletter and I'll be updating you as these moves happen. Okay, enough of silver. Now, while people are focusing on AI, they're forgetting about crypto. I still do not believe in crypto, but I cannot deny that crypto does provide some good moves that we can participate in as traders and make money. Now, there are 3 cryptos that I'm watching. The first one is Solana. Solana is showing something very nice. When we look at the Solana chart, this is a daily chart of Solana. The first thing that we see is this huge trend line break. I like to draw these trend lines because they help to show you the bigger picture of things. The first thing that we see in Solana is it broke out here and then it just fakes everybody out because I thought it was going to go to the moon, and then it comes down and crashes again. But then it starts to form something really beautiful. It breaks out of this long trend line, forms something called a lower chit here. So a lower chit is when it forms the lower third of the base, and then we get this big green candle. I color coded my candles, so green means that there was a lot of volume compared to the previous days. So when it breaks out with such big green pivot candles, and I know it has started moving up. It did that and kind of crashed again, and now it's set up again. It's a little bit choppy, but on the longer term, I think it's going to do something really nice because one of my indicators is the relative strength indicator. The question is, how can you profit from Solana? So there's an ETF called SOL. SOLX. Is it SOLX? I am forgetting. SOLZ. So here I did provide a long-term alert to people on the first green candle here. So buy at market, stop was here, take some profit here, and then it came back down and it stopped me out. I bought again today and I'm making this video because it has now recovered. Sometimes in trading, you have to keep watching, get out when you have to, get in when you need to. So this one is an ETF that just replicates the price action of Solana. So whenever Solana moves 1%, this one moves 1%. Then it's also a ×2 ETF, but I don't think I would touch that. Reason being, it's moving about 15% per day now. 15% per day is very, very volatile. So in 2 days, whatever money you put in could have dropped 40%, right? Also in 2 days, your money could have gone up 80%. So I don't like such volatility. Enough with Solana, we go on to XRP, which is what I'm really excited about. So this is a base that we've been studying for a while. So XRP has this really, really huge breakout here. XRP literally goes up about 300%, 400%, which is a very big move. I think in my head that this thing is about to break out again. It breaks out, but then it comes back and fails. And then it looks like it's going to be setting up this whole time. It forms some cheats here, but then none of them are trustworthy. Then we see a trend line forming, and the first sign of life is here again. 9th May, it does this very nice breakout out of this cheat, and that's very nice, so I expected it to go up. But one thing is that stocks rarely go above a falling 50-day simple moving average. This black line you see here is a 50-day simple moving average. Normally what happens is that they go up and they come back and test it. So we see it come back and test this level of support, which is expected. After that sort of double bounce, then it's going back up. I wouldn't trust this thing unless it breaks above the high here and then forms something called a handle or an equivalent of this, but it forms it in this upper third of the base. When it does something like that, I think this thing is going to rip up and move again. But now onto the most exciting, which is Bitcoin. Bitcoin has been acting so nice. This is where your money should be. Not because I believe in Bitcoin, I don't believe in crypto, but because it is showing very beautiful price action. I think it's all of these MAGA people that are pushing these things up. But as a stock trader, I don't ask questions. This is not time for ethics. I just buy when it shows movement. So let's go to the weekly chart and see what's really happening. If you really zoom out, you can see Bitcoin has been sitting down since 2021. This is 2025. So what does that say? The price hasn't really gone anywhere for 4 years. And remember when I told you that when these things break out, they will run about half of the time of the breakout? Yes. So I think this thing will run from November 2024 till November 2026. How is it going to run? I think it's likely to do something like it did here in 2016. Now, I don't think it's going to go up 2,000 or 3,000%, but hear me out. You see this very big base from 2013 to 2017, right? Around here. Takes about 4 years. And then it runs for 2 years from January 2017 till December 2017. And this move did produce 3,000%. That is something which we can see here again. So it sits down again from 2018, 2020. This is about 2.5 years. Breaks out and then does 560% move, which is really nice. And then now we sit down for 4 years. When was the last time we sat down for 4 years? Was it not here? You see that? And then it breaks out and it returns onto the support level, which is quite normal for breakouts. Normally just run out. Like we see here, once it broke out here, it just went. Sometimes it will pull back. So here we see a breakout. These breakouts that are slanting are not as nice as flat breakouts. Flat breakouts are the best. Here we can see it broke out and then returned a little bit and then ran again. So you can see the nature of breakouts. Also here, once it's forming a base, jumps out of the resistance, sits on the resistance, then moves. So I think that's what's happening here. Breaks out to all-time highs. All-time highs is a very good sign because no one is ready to dump the stock or the commodity or the crypto, whatever it is, a tradable commodity. And then it comes and sits back onto this resistance. And that's when I started loading up again. And then here we can see also the daily chart. We can use this as a study chart for Bitcoin. This is a very nice chart. You should study it because here we have a double top. It fails, it comes back down. You should be out whenever you see these things. Don't hold on to something. Forms a checkout. So checkouts mean that people are trying to push the price down so that they can buy for themselves. Whenever I see these checkouts and then it forms a chit, this was the first buying point that I bought. I did ride this move up here because in my head I was like, oh, this thing is just going to go up. But remember when I said fall stocks rarely just cross up a falling 50-day simple moving average. They normally will go up and then test it. So it comes and tests it, and also it's doing something called a handle. So this is quite expected for breakouts. There was this sort of handle before it did this 60% move, which I actually did profit from last year. I was stopped out here because I am using the Bitcoin ETF, and I'm going to show you why. And then I re-entered again, and we see this very strong candle. So these strong candles are always a good sign. So long candles and it closes at the top of the candle means that people are very bullish and they're buying. Bitcoin has a very clean price action. How can you profit from Bitcoin? The first one that I really like is the 2 times ETF of Bitcoin, because Bitcoin moves about 3.95% per day, which is not a lot. So I normally use the 2 times ETF, which is BITX. So you can see my trade recommendations on BITX, but let me first show you why BITX is a very good crypto. Let's go back to this move where Bitcoin. So on this particular move, Bitcoin itself went up 100%, but this one, it went up 120%, but the 2 times ETF went up 400%. So you can see that whenever you hold on to this thing, but you need to know exactly when to get in and out, but that's what I'll do for you in the newsletter. Sign up for that if you're quite interested in that service. Yeah, so you buy it there, and then you just have to hold, and then you have to know when to get out. For these very first things, you have to use the 20-day simple moving average. So we see 400%. Then here, we remember Bitcoin moved up 60%. This one did about 150%. So I was like, wow. Because I remember that time I raised $50, and I think I made 1,000. Okay, after looking through Bitcoin, let's see which stocks Bitcoin is helping move up. The first one is MicroStrategy. Of course, there are several stocks, but we always want to focus on the best of the best. And I think there are 3 stocks which are the best. And out of those 3, you just want to focus on the top 2. The third one is never even a very good option. So MicroStrategy here, we can see on the weekly chart, a very nice cup with a handle. This is a very good base structure. We see a bunch of checkouts. This double bottom is a very good signs. Then you see the trend line break. And we all know that when a stock is rising under a falling 50-day simple moving average, it normally comes back to test it, which I think is what is happening. And since Bitcoin looks like it's showing a very bullish signal, then I would expect MicroStrategy to jump as well, because every time Bitcoin moves, MicroStrategy does a bigger move. The next one is Coinbase, and Coinbase just did a very, very good signal today. So you see that these are all showing very similar signals, but one close number you have to look for is this IBD relative strength. So MicroStrategy has a higher value. That means it has kept its price. It has acted much better than Coinbase. Coinbase has a very low value. That's the thing that I use to grade these stocks. But then Coinbase has shown a very strong signal. When you see these green candles, I color-coded them to mean that there's very strong volume on those days. And here we see it is having a long base as well. We are just waiting for it to jump out of this chit. This is something called a mid chit. A mid chit is when it happens in the mid of the base like this. The best chit are the one in the upper third of the base, but this is in the mid of the base, so kind of the second best option. These low chits that happen in the lower third of the base, those ones are okay, but they're better as swing trades and not long-term holds. So I really think this is just going to jump out and then keep running like it did here in the past, because when Bitcoin runs, then since Coinbase is directly related to Bitcoin, I think it's going to do something very similar. Then the third and last one in this crypto sector is something called HAT. Now, HAT is the third best, as you can see from this value here. The reason I don't like HAT is that its 30-week moving average is flattening. That's not always a good sign because the stock has to fight over that. And it corrected a lot. This one corrected about 60%. So these are never very good signs. And this is kind of the weakest. I'm just going to keep watch of this for swing trades. But if I was to hold to get a very good Bitcoin move, I would definitely choose MicroStrategy or Coinbase, one of those two. Then HAT will be if you're to miss out on the other 2 moves. But if you're watching them every day, then you're not going to miss out. And now on to the next part of our video. AI just did something that is going to send these nuclear stocks to the moon. Now, what is happening is that AI needs a lot of power. These stocks that I'm about to show you are utility stocks that generate power that supports AI. We are seeing that those stocks are having very strong momentum. This is one of the strongest sectors in the market. This is also something you can learn. So if something primarily is going on like AI, then you have to think, what things does AI depend on? One of them is power. AI needs a lot of power. The first stock in this sector is NRG. You can see relative strength is 73. I thought it was going down. To my surprise, when the market recovered, NRG had a very strong move on earnings. These earnings look tricky for a lot of people, but this is actually a very good time to get in, especially when a stock gets out of a big base like this. You see all of this confusion where the stock was jumping up and down. It's always a good sign when it just jumps up like this, and then we can see on the weekly chart, it is having those tight wicks. That means no one is willing to sell this stock. If it was bad, then it would have come back down. But you have to ask yourself, why is it not coming back down? It's just forming these tight wicks, and after it jumps out of this, I'll be sending out an alert, and then you can go in for a swing trade or a long-term trade. The second best one that I love is GEV. Actually, this is showing the strongest price action. So you can see that was a swing trade. So here I was showing you base 1, base 2, and then after base 2 finished, now it has done a base 1 again. So you see these cycles keep repeating over again. This one has already jumped out, but I think it's going to set up for another move. This is the second best option. Then the third best options are TLN 65. I sent out an alert because it had a very nice base. Stocks in the same sector are likely to have very similar patterns. When you're confused about one stock and it's showing an iffy pattern, look at other stocks in the same sector. Then you'll likely know what is going to happen next. The next one is VST. It's forming a very nice base. Look at this long trend line. It has been broken. A trend line is trustworthy when it touches at least 3 points. We have a checkout down here. It's looking like it has a cup with a handle. I like the setup of VST a lot because it is looking very textbook, and this handle is in the upper third of the base. Once it jumps above this price and comes above 180, I would buy this because I think it's going to run for a while. And you can see the relative strength is still strong. Then lastly, one of the ones that I've been trading is Oklo. If we go to the latest part, you can see that it formed a very nice base. You see all of these low chits, then it comes and forms. Now this is what we call a handle, which is in the upper side of the base. Now this is where you buy. If you're a very long-term trader, riskier, you can start building your position from down here. By the time it breaks out here, you add your final position, and then you ride this thing above the 20-day exponential moving average. I actually entered here on the gap up because it had formed this mid chit here. It jumped up the next day. I bought quickly. Currently, this one is up about 50% from the time I bought it. So these things move fast. You don't want to miss out on them. So enough with the power generation. We've looked enough at that sector. Now onto the next sector. And this sector is very exciting. Quantum stocks. I think AI is a hot thing, but I think Wall Street is dumping AI stocks to buy these 3 quantum stocks that I'm about to show you. I'm going to go from worst to best. The first one, and I don't like this one, is RGTI. This one has a very strong relative strength. Last year, we can see that RGTI had this very, very big run. It gapped up here, could have bought around here, then it went up about 700%. So that was a sweet move. Of course, I don't think you're going to get a whole 700%. Maybe you would have gotten about 400%. But then we see it forming a base here. This is a very nice base. Now this looks more like something called a virtual contraction pattern. The drops become smaller and smaller, and then it breaks out on volume. I remember recommending this stock quite a while back. Once it came and closed above the 20-day, I exited my position. Normally I use the 20-day as my filter. So once it closes under the 20-day, I sell 70%. And if it moves up below the low of that day, then I can sell almost the rest of my position. So this one I exited already because it's taking long to move, but I think it's going to move. Once this thing moves, it's going to move. That's why I have an alert here, waiting for it to move. Then the next one is QUBT. I recommended it because it had an earnings play. You have to understand the general structure of the market, but in that general structure, there are also minor things happening. Quantum computing is a very strong sector. We want to find the strongest sectors and then the strongest stocks. Now, there are 2 very strong stocks in the quantum computing sector. This is one of them, and I'm going to show you the next one soon. After finding those stocks, then you want to be getting into the best one. And what is the best stocks? It's normally the stock that has the best relative strength. And then also many times it is a stock that moves first. That's what I found. The one that moves first, because many of them are going to be having the same type of base. If I do a triple compare in a daily chart, here I show you the 3 quantum computing stocks. I have RGTI, QUBT, and QBTS. Around on this particular day, 7th May, we can see that these ones start moving. From 7th May, QBTS had gone up about 162%. This one has gone up about 170%. But from 7th May, RGTI actually, the maximum it went up was 45. So that shows you that it is weaker than the others. And at the time of buying, QBTS showed the strongest signal and QUBT was the second best, but now QUBT became the best stock. So we can see that it had this big drop, then formed a smaller drop, then formed the last small drop. And this was the first time to buy around here. Yeah, 8th May. So whenever it forms these breakout candles, you want to wait to buy above the high of the candle. If you're impatient, you'll always be stopped out because we had a green candle here, but the next day it faked us out, right? Then it jumped out again. And that's another thing. Don't give up. So if you bought here, right now you'd be up about 150%. For me, I bought on the earnings because I saw earnings. I bought here around $10 and I'm just riding it. I think I'm up about 80-90%. Yeah, 107%. So now we have to understand, where are we in the base? Where are we in the general structure of the market? This is where normally people are supposed to be getting in. This is what we call the chit, right? This is the mid chit, it's in the middle of the base. Then this is a small handle here. If it goes above this high, this thing is going to jump out of the base. Then you just want to wait for it to close under the 20 EMA. So this one last year it went up about 1,000%. So if you put in $1,000, you got 10 grand back. Let's wait and see what's going to happen this year. Yeah, so QBTS as well. I recommended it here because this is something called an earnings play. This had the virtual contraction pattern. It dropped about 70%. Then the next time it dropped 50%. Then here it had about a 17% drop. If you want to know which drop is going to be the last to break out, the last drop normally is less than 3 times the average true range of the last 14 days. So I know the average true range is about 15% for this stock. So for me, if it was less than 30%, I'm like, okay, that's tight enough. This was when the market was recovering. A lot of things come together. Once you understand these things, you can know when to get in. This stock is also setting up for another entry here. So you can see it has jumped out of the base. Normally, once the stock jumps out of a big base like this, that has taken several weeks, the first pullback to the 20-day EMA is normally very trustworthy. So you can also buy here. Again, because this is in the very early stages of the stock. This is something that can be called a high tide flag, right? So it jumps out 100% in a few weeks, and then it's likely to continue. I think this thing can do another even 200%. So let's wait and see. I hope you can make money from that. Let's go into technologies. I found 5 tech stocks that AI companies are slowly gobbling up. These are the hottest tech stocks on the market. Last year it was NVDA, SMCI. A lot of people make a mistake trying to keep those old stocks. Every year something else comes. If you know how to watch for the best sector and find the best stock, you're always going to be in the best stock. So the first one is Palantir. As you can see, recommendation, this is for the newsletter. So sign up for the newsletter, then you can always see these things. Whenever I'm giving out a recommendation, I show you why this is a good setup. So here we see a good cup with a handle. We see a checkout. The first time I entered Palantir was here around $100, but that was for a swing trade because these lot sheets are not to be trusted. They are better to be swung as a trade. Sold around here for a 25% gain. Once it's set up here, you see this very tight price action. It jumped out on this big green candle. This was a volume candle. And these volume candles, we want it to just go immediately. And normally after these volume candles, the stock will just run. I'll show you an example. So you see big volume stock went up about 40%. Big volume candle on earnings, stock went up about 80%, right? These big volume candles are our signals. And I saw that right here. Palantir has been respecting the 20-day exponential moving average. If it comes back halfway, I even sell about 50% of my position already, or even 60%. Because these big volume candles, you just want it to go and not come back. Because you see from the past, it shouldn't come back down. If it comes back down of the volume candle, something is wrong. It's not yet time. So you see here, it went up, came back down. It was not yet time. And you have to be patient for it. So that's what happened here. And then it came back and jumped again. That's when I sent out the recommendation. So Palantir, gold one is when you just take off a little bit and then you let the rest ride. And then there is TSSI. This one is a very small company, so I did not recommend it, but it had a very nice setup. So cap and handle base. You have a handle in the upper side of the base. You can see these things happen over and over again. Doesn't happen in all the stocks, but in many of them, and then you just have to look for those setups. Because the stock market has so many strategies, but if you just find a few and then master them, world is going to be your oyster. So you see a nice cap and a handle. Breaks out on volume, bought it here. Then now it's forming this nice kind of cheat. So, tomorrow if it jumps up above that price, it's the time to add to my position, right? And then this one, I'll just be waiting for it to close under the 20-day exponential moving average. And you can see the relative strength value is 345. So that's very strong. I know the real investor business daily uses a scale of 0 to 100, but I don't like that scale because it takes away the strength of some stocks. So like QUBT, this one would have 99. But that's not fair because we are forcing them to go from 0 to 99. But this one cannot be called 99 because it's actually having 345, while the other one would be having about 1,000. So I like to keep this value that is not bounded. Bounded things can be tricky sometimes. The next one, IONUQ. This one is still forming in a base. Very nice base here. Cap, handle. I hope you can see that. Don't start buying very early. You gotta just be patient for it. A lot of people try to buy very early down here, but it's never a good idea. So what is happening is that it's forming a handle here, and as soon as it breaks out, it's going to be a very nice buy because the base is long, it has a nice setup, and it's also looking very strong. So that's going to be a buy when that comes. The next one is A-Lab as well. A-Lab is something I'm watching. It's forming sort of a, this is not one of the best. I don't like it so much because it dropped about 70%, so not to be trusted, but I'm watching this. Ideally, you want something in the upper side of the base. Then there is Meta. So we have Meta here as well. It's forming a nice cap with a handle, so investors know something about this stock. It's also a good buy. But of course, such big stocks like Meta are not going to move a lot, so it's not going to be that exciting because it's already $1 trillion company. It can go to 10 trillion. Now let's go into the financial sector. So I found 5 financial stocks that AI billionaires are secretly owning. And here's proof. The first one is Sezzle. This one was recommended, of course. It was an earnings play, and whenever earnings you see a huge surprise like this and it gaps up, just buy it. Don't ask questions. And you can see the thing has gone up about 115% from the time it was recommended. For this one, wait for it to close. And since it came out of a big base, we can expect it to form a base of about 4 to 6 weeks, come back to the 50 EMA, and then it's likely to run up again. Because the first 2 bases are the most trustworthy. For those who already bought, they're in profit. Sign up to the newsletter. But for those who haven't bought, then I'm sure there's going to be another opportunity for you in the future. The next one is Hood. Now this one, I feel bad because I missed it. I was a little bit scared, but I should have been aggressive. Let's see the good technical signs. This is clearly a cap with a handle here, right? So we have a mid-chit over here. We have a checkout. Very ideal. So you see the handle breaks out on this day. We can see that big green candle. This was the time to buy here, right? And then currently it's up about 15%. Your risk would have been about 5%. So if you risked $100, you're up $300 right now. This is one of the strongest stocks on the financial sector. And the reason I was scared is that I felt like it was going to come back and test the 50-day simple moving average, but it didn't do that. Next one is Dave. Dave was an earnings play recommended to be bought in the morning. Stop was supposed to be the law of the day. This recommendation was in before the market opened. The risk is normally 1.5 of the average true range. And currently, the maximum it went up was about 80%. So that was a very good trade. When stocks jump out of big bases like this, called the base on base, they don't just stop there. What normally happens is that they're going to pull back to the 50-day. And then it's likely to run up again. So I think the stock still has quite a lot of legs in it. Next one is Root. This one looks like it's setting up, but it's not ready yet, but it's on my radar. If it forms a good structure, it's going to be nice. The best structure that I can hope for is a VCP pattern. A drop here, 37% drop, then a drop here, 23% drop, then a tight drop here. If it jumps out of this But there's a very strong resistance here that the stock has refused to jump out of. We gotta be patient, but it is on the radar because this stock can move. Okay, now I've shown you all other stocks in the stock market, but then there are some stocks which are just special stocks which are not in strong sectors, but they're showing exceptional growth, and you don't want to miss those. These are stocks that AI forgot, but I don't think you should forget them. The first one is IT. Now I love that it has even, so we can see a nice cup with a handle, very smooth, and it has formed a handle in the upper third of the base. It has jumped out today. Of course, I'm going to recommend it today. Just buy above the high of this candle. Stop is just below. If it comes back here, not to be trusted, then it might set up, but not on volume. So that's why I'm a little bit skeptical. But this is a very strong stock. It has formed a very nice long base. The base has taken about 20 bars. Last time the base took about 14 bars and produced 150% move. This one has set for 20 bars. How far can it go? We're not sure, but this setup is as good as they come. Of course, I started out my position here in the low chit, and then now here in the handle, I'm just gonna go full on and then see where that takes me. One in cyclical sector as well. So we're in the cyclical sector. So it's it, Kavana, and then I'm going to show you leisure stocks. Now Kavana jumped up, and like I said, when stocks go through a falling 50-day moving average, they normally come back and test it. So I think that's what is happening with Kavana. Now, of course, this might be its last move, so we have to just be patient and see if Kavana is actually even gonna make a final move. So you have to wait for it to recover, but it's on the radar. Then there are leisure stocks. Leisure stocks have been doing quite well. The first one is RCL, as you can see, recommended. This was a cup with a handle. This was a late stage base, so it only moved up a little bit. So this, you normally want to wait for the big bases that come during a market correction. This one was a late stage base and it moved up, but then it fizzled out quickly. Here we see it, it comes back, sets up again, a cup with a handle, and then now it's just going, and then we're just gonna wait and see. That is the best stock in the leisure sector, so you always want to have the best stocks. The second best stock in the leisure sector is CUK. It has the same pattern as the previous one, cup with a handle, but I wouldn't call this a handle because it's not in the upper third of the base. This is in the middle part of the base. I would just avoid the second best stocks. CUK and CCL are very similar stocks, but I wouldn't trust them that much. You always want to be in the best stock. It's very tempting to be in the second best stock, but you always want to be in the best stock. Now, after the cyclical sector, those were cyclical stocks. I gave you 4 stocks: Kavana, RCL, and CUK. The next one is engineering and construction. So there is Fix, which I also already sent out a recommendation, cup with a handle. But this is not one of the strongest sectors. But you can always have a stock in such sectors because it can help you diversify your portfolio, right? So you can get the faster moving sectors, and then you can get something like Fix. And because these things, they're not too bad. They do move. Last time Fix here did 50% move in just about 5 weeks. Then here, it also did another 50% move. Fix could do maybe a 40% move. That can be very good for your portfolio. In the same sector, there is MA. So Fix is the best stock. So Fix is the second best stock in this sector. The best stock in this sector is AGX. This one has already moved as well, so it's gone, but we have to just watch and wait. So this one is a little bit confusing because it kind of broke out here. Sometimes they break out from the middle part of the base, and it has gone up about 60% maximum from a good buy point. The third best, which I would recommend you not to be in, is MA. Always avoid the third best stocks. Always focus on the best 2 and the best one if you can. In defense and aerospace, which is also a very hot sector right now. So there's RKLB. It has been setting up quite nice, but it jumped out here and then it came and closed another 20 days. It showed weakness. Is it going to recover? It has recovered, and if it comes above this high, you can start rebuilding your position again. So that's how these things work. And then we want the last chit to be less than 3 times of the average true range. So we want it to be less than about 20%, so 15%. I'm not counting these spikes because they don't seem to matter. I'm just counting the closest. It's about 16%. If it jumps out of here, it's going to be a very good buy. Last year, you saw what this thing could do. Moved up about 300% this year. Not sure, but looking forward to it. I think this is the best stock in the defense sector in terms of movement. The second best is ACHR. This one has been very volatile. That's why I don't like it, because it had this very huge correction here of 30%, and then we were looking for at most 24% correction. It jumped up again and then came back down. So you see, this smaller stocks can really put you through the work. That's why it's always better to go with the best stock and big stocks, because they don't do things like this. And last of the stocks that you have forgotten about, this is one of the best stocks on the market, is HIMS. We can see HIMS just formed this nice cap, and it seems to be forming a handle, right? Now this handle is not looking too good. I already recommended it to people, but that was on this particular day. So people took some profit here, it came back down. Ideally, you should be out by now. Wait for a good setup. The reason why I'm not loving HIMS right now is that it is wedging up. Whenever price struggles to go in a particular direction, that's always a sign that the stock might go into the opposite direction. You don't want things to suffer to move. When it's going up, the moving is easy. But here it's struggling to go up. Ideally, we want to see it from a pattern where it wedges down and then jumps out of that wedge. So like here, it looked like it was going to break out, came back down, tested the breakout level again, and then jumped up about 150%. So that was a very sweet move. And yeah, that was the last stock. I hope you found value in this video. This is quite a long video, and may the markets be with you.